Imagine we are in year 2027. One fine day, you call one of your best friends to say, hey, there is a massive sale going on smartwatches in Reliance Digital in Ambience Mall in Gurugram. Let's go. Both of you reach the Ambience Mall and go to Reliance Digital. You had the budget of 50,000 rupees to buy a smartwatch, but as always happens, you end up liking Apple's Ultra 2 GPS cellular 49mm titanium case with orange ocean band. This is going to cost you 90,000 rupees. Sympathizing with your aspirations, a salesman walks in and says to you, Mr. Sharma, you like this watch? Don't you worry. We know your credit history is really good. We would like to offer you a loan on this smartwatch from Jio Financial Services at an interest rate of only 7%. You can walk away with this smartwatch right away and you take the offer immediately. Both of you pop into the nearest Reliance Mall and go for your favorite ice cream, chocolate caramel with pistachio and nuts. In this entire journey, Reliance has sold you 4 of their big businesses. Number 1, if you are a Jio Telecom customer, you would have made the phone call using the Jio network. Number 2, you procured smartwatch from the Reliance Digital. Number 3, Jio Financial Services sold you a loan at 7% rate. And number 4, ice cream from Reliance Consumer Products. My point is, Reliance wants to sell multiple businesses to one single customer. And we are not talking about 100 customers, 1000 customers. We are talking about millions of Indian consumers. In this video, I am going to talk about Jio Financial Services that has divided investors into 2 camps. First camp says that Jio Financial Services is a total big hype and you should not invest in this stock. The second camp is that Jio Financial Services is going to be a multi-bagger in the coming years. You need to buy it in bulks. And also there is a third type who has no clue what Jio Financial Services does and are sitting on the fence. This video will give you a perspective whether Jio Financial Services is going to be a hype or it is going to be multi-bagger, and I'll present you data so that you make the decision. What you see on my screen is the business divisions that Jio Financial Services is going to have as per their quarterly results that they have published very recently. Simply put, Jio Financials you can imagine being a big merger of few big companies, including number 1, Bajaj Finance in the NBFC sector. Number 2, Policy Bazaar in the insurance sector. Number 3, Paytm for the payment services. And number 4, SBI mutual funds in the AMC businesses. If these 4 companies merge together, something like Jio Financial will get created. But more importantly, what we need to do is understand the potential and the risks and the challenges that Jio is going to face in each of these business divisions. I'm going to present that to you in a very simple language in the next few minutes. Before I do that, if you're new to this channel, consider subscribing now. Also, I post in-depth exclusive analysis on stocks, mutual funds and businesses. You can join my YouTube member community for that. You will find the link in the description. Let me first talk about their AMC business. Let's talk about the positives and the negatives both so that you understand the entire perspective on their AMC business. The first very big positive is that Jio has a joint venture with BlackRock. What is so big deal about it? BlackRock is the world's largest AMC company. Their assets under management as per Wikipedia is $9.42 trillion US. And when you have a joint venture with companies like BlackRock, what it brings on the table is the best of the best softwares, the best of the best frameworks, the best of the best processes, the best of the best practices. So for example, here their software called Aladdin, it keeps track of investment portfolios at a higher scale. Secondly, their BlackRock solution division that provides the financial risk management services. So BlackRock can be the game changer for Jio Financial Services and can very well be a big differentiator versus any other AMCs in the Indian market. The second big positive on AMC business that Reliance has is the distribution reach. Because what you need in AMC business is the ability to be able to distribute your mutual fund to millions of customers. For example, what you see on my screen is list of top AMCs in India right now, and you will see that SBI mutual fund is number 1, ICICI number 2 and HDFC number 3. The source of this data is Grow's website. You can very well find it. One thing that you will notice in the top 3 AMCs in India is that all 3 of them are banks, and banks have massive distribution power because of their branches, and that is where Reliance need to make sure that they can distribute these mutual funds to millions of customers, and they are going to do that with their retail stores reach that I'm going to talk about later in this video. Let us now talk about 3 big challenges that Jio is going to face. Number 1 is that they have to first get the license for AMC from SEBI, and this take a lot of time. For example, Zerodha applied for the AMC license back in 2020 and they got the in principle approval in 2021, after 1 year of the application. And even now, Zerodha does not have the mutual fund at the time of recording this video. So it's taken almost 3 years of time for Zerodha to even get into this business. So this business, we need to wait for at least 2 to 3 years before it starts to give any profitability to Reliance's Jio business. Second big challenge that Jio and the entire AMC businesses right now face is that SEBI has been asking to reduce their total expense ratio. And according to Jeffrey's reports, this is going to erode the profit margins of AMC business by close to 30 to 40%. So this is a big challenge that Jio is going to face in the coming years. Point number 3 is Jio plus BlackRock combination has no clue about India's regulation, SEBI's regulations. For example, data localization norms that SEBI has, both of them are immature in this area and regulation can kill the businesses. So this is the third biggest challenge that Jio has to overcome in the coming years. So all in all, their AMC businesses have potential to grow, but it comes with challenges. In my view, it is a game of patience. We have to wait and watch for 2 to 3 years at least before they can start to give some profitability to Jio Financial Services. The second company Jio Financial has underneath is Reliance Industrial Investment Holding Limited. This is not a separate business. This exists mainly for Jio Financial to own the stake in Reliance Industries. So let me break it down for you. Jio Financials hold a 3.5% stake in Reliance Industries using this 100% subsidiary of Jio Financial, and also they have another 2.4% stake where this Reliance Industrial Investment Holding is the sole beneficiary. What does this simply mean is that Jio Financials holds close to 6% stake in Reliance Industries. This is extremely important point that you need to understand, because let me now also present to you their quarterly results that have been recently published. What you see on my screen is their Q2 2024 profit after tax has merely doubled, 668 crores. But what people understand to fail is that this profit is mainly because of 217 crore dividend that has been paid by Reliance Industries to Jio Financial Services because of this 6% stake via Reliance Industrial Investments Holding Limited. So if I come back and show it to you, their interest income for Q2 has actually declined 7.83% here, and most people fail to understand this. They just think that their profits have doubled in just one quarter. Let us go ahead and buy Jio Financials right now because the stock is falling and the profits are going up. Please do not make this mistake. If you like these type of analysis, what you can do is consider subscribing to my YouTube member community, because I post in-depth exclusive analysis on stocks and mutual funds. And that is going to give you a lot of information so that you make informed investing decisions. Let us now move to their third and the fourth business, which is the payments business. What you see on my screen is that they have payments bank and then they have payment solutions. Now, when I talk about the payments bank, what we are talking about is they are offering a savings bank account. How does a payment bank differ with normal banks like HDFC, SBI and so on? The key difference is that the payments bank cannot use the money that they have collected and give it as a loan. This is the big difference, because loans is where the most banks make real money. So Jio Payment Bank is not likely to make the money that banks like HDFC, SBI and all these banks are making, because they can't even offer a loan. Secondly, they are going to use the payment bank mainly for the bill payments. Also, they have a plan to launch a debit card. Now, why Jio is then talking about payments bank, I will talk about in a second. But the second division is the payment solutions division, and you will notice that Paytm has done the mastery in this business because of their sound box.
Paytm karo.
Paytm karo. That is what we see with the merchants. Here Jio's clear plan is to target small merchants or the suppliers, because there is a big potential for Jio to offer the loans to these guys. But for them to offer the loans, they need to bring these guys on board to the Jio app. And the only way to do is to launch payment solutions such as Soundbox and many other solutions that will come out in the future. But please understand, the biggest problem with the payments business is that the payment business is not profitable at all. What you see on my screen is Paytm's last few years P&L account. Paytm is 197 as the listed company, and you will notice here that net profits have been continuously declining. In fact, I made a full video on Paytm. Paytm is still not a profitable company. I will only consider investing in Paytm the moment it becomes profitable. Right now it is not profitable. So just imagine, Paytm has taken a number of years, 7 to 8 years, and have not become profitable so far. Do you think Jio's payment section is going to become profitable? I doubt. I highly doubt. And according to me, this is a hyped business, because if you read this news, back in 2021, there was a news that Warren Buffett can double his money by investing in Paytm, and guess what? In 2022, Warren Buffett is sitting in millions of dollars of losses because he invested in Paytm, a wrong business. But the main question remains then, why Jio is launching the payment business? Because of getting the customer data, consumer data, because Jio wants consumers to come onto the Jio's payment ecosystem, and the moment they do, they can be offered other services such as loans, such as insurance products, such as mutual funds. This is where the entire financial services narrative is moving, that the customer data is the new oil. So far, if you're liking the video, hit the like button and let me know a simple thank you in the comment section. It will motivate and encourage me to bring more quality content to you at zero cost. Let us now move to their next two businesses, insurance business as well as their lending business, and then we will talk about the valuation of this company as well as my views on when I am likely to invest in this company. So let us talk about the insurance business first. So from an insurance business perspective, you can consider them something like Policybazaar that have tie-ups with many insurance providers, and Policybazaar acts as an aggregator. Jio is likely to do something very, very similar. But again, the biggest problem is profitability. Have a look at my screen and you will see that Policybazaar Fintech, which is the listed name of Policybazaar, have been in negative profits for a number of years. So from March 2015 onwards, if you see the net profits, they have been in red. It is not yet profitable after almost 8 years of operations. And their CEO had to say this in 2022 that the Policybazaar will become profitable by 2024. My point is extremely simple. Jio Insurance may not become a profitable business for a number of years. So if you have these expectations that Jio is going to be profitable from day one, I think you need to correct that perspective. But the question remains that why Jio is embarking into insurance sector. Again, it is the consumer data. It is that one-stop service that they want to offer to consumers that will bring more and more customers to them. It's all about scale, not about making individual businesses profitable. Of course, they would like to do it and they will attempt to do it. I'm not saying that they will not make these businesses profitable, but it may take a number of years before they see profitability. Let us now come to their lending business, which is what Jio Finance Limited is all about. So if we talk about their lending business, they have plans to launch personal loans for salaried and self-employed individuals, also consumer durable loans. We talked about this in the beginning of the video as well, where the smartwatch loan was offered. It is one of their products they sell through Reliance Digital, but they sell other consumer durable products such as washing machine, fridge, TV, etc. And this business is going to give them a lot of money. Why I say that with conviction is because if you see on my screen, this is Bajaj Finance's last few years performance, and the business from 2015 onwards has been milking money like anything. If you see their net profits, 800 crores in March 2015 is now 11,000 crores in March 2023. Now, why Jio can disrupt this segment of the market? Simply because Reliance is a AAA credit rating company. Because of this reason, Jio also enjoys that credit rating, and what happens as a result of this is that they're going to have the borrowing cost extremely low as compared to many other NBFCs which are struggling in this sector. The second biggest advantage that Jio has over many other NBFCs is its distribution power. Just to put this in context, what you see on my screen is HDFC Bank, the largest bank in India, has branches which is close to 8,000 right now. And if I show you this article that was published in Business Today, you see that Reliance has close to 18,000 number of stores, giving Jio access to close to 7,000 plus towns. So this distribution reach that Reliance has is what Jio is going to leverage and able to reach to millions of customers. And the third biggest competitive advantage that Jio has, its consumer base. Let me walk you through some numbers. Again, have a look at my screen. Business Today article, 480 million number of mobile and fixed line subscribers because of their telecom business. Let me also go ahead and talk about 249 million registered customer base at retail outlets. These are the people who have given their data to Reliance. Also 780 million footfall across all its stores. This is where the nexus of opportunities lies. 3 million merchant partnerships. 250,000 weavers and micro entrepreneurs which are ready to get loans from Jio Financial Services. So it's all about the consumer data and selling multiple services to one consumer, so it becomes one-stop service is where Jio Financial's differentiator or the business moat lies. It is not about making individual businesses profitable. It is to make sure to develop a big ecosystem where every consumer can get products and services at a very, very good rate. And also, if you look at the management, they have hired KV Kamath, a well-known person who is the chairman of this Jio Financial Services, can take the company to new heights. Having said that, in my view, the biggest challenge that Jio is going to face is that if you look at their businesses, AMC business is regulated by SEBI. They have to deal with SEBI. Their payments businesses is regulated by RBI. They have to deal with RBI. Their insurance business is regulated by IRDA. Again, a big problem from a regulator perspective. And lastly, their lending business is also going to be governed by, regulated by RBI. Dealing with multiple regulators is not going to be easy. The devil lies in the executions. Rahul, all of this detail is fine. Keep this to one side and just tell us whether we should go and buy Jio Financial Services right now or not. Let me just talk about valuation side of it. Point number one is nobody can value Jio Financial Services because it has complicated mix of these companies and the businesses that I've talked about in the last 20 minutes. But more importantly, if we do a simple maths of Jio Financial Services holds 6.1% direct stake in Reliance Industries, right? So what is the current price of Reliance Industries right now is 2296, albeit it is down in the last few months. And if we do the simple maths of 0.06 of 2296 right now at the time of recording this video on 21st of October, then you will see that it is coming out to be 140 rupees. So by investing in Jio Financial Services right now, 140 rupees, you can imagine that you are directly putting in Reliance Industries. What is the current price of Jio Financial Services? 214. Nobody can tell you whether it should be 200, 280, 100, 150 and so on. In my view, if I had Reliance Industries shares and if I got Jio Financial Services because of 1-to-1 ratios, I would just sit on Jio Financial shares for the next 10 years and wait and watch. It was a free share anyways I got. Of course, the Reliance Industries share price is balanced because of that, but I would just take these shares and sit on it and wait and watch for the next 5 to 8 years. For the new investors, in my view, Reliance is going to be a multi-bagger, but the game is patience here. Do not expect this 214 rupees of price to go down to 500 in the next 6 months. It may happen, it may fall down to 100 rupees. There is going to be volatility, but I think what we need to do is it is a game of patience. If you are a long-term investor, 8 to 10 years, you need to build positions in Jio Financial Services as we go along in this journey because that is the right strategy. I am going to very soon invest in Jio Financial Services. Not a stock recommendation for you. Please do not take this as a recommendation. But I am going to invest in Jio Financial Services very, very soon. And I'll announce that on my member community. Consider subscribing to my member community because not only you get the research-based analysis that I do, it will also help you make informed decisions. I would now request you to watch these videos. They will help you understand a lot about investing. Also, let me know in the comments a simple thank you if you like this video. It will encourage and motivate me to do more research and improve every single day, bring you quality content at zero cost. I hope you enjoyed this video. I will see you in my next video. Until then, keep rocking.